Hey guys, how you doing? This is Tevin from Simple Forex Options. Please excuse my stuffy nose, man. I'm coming down with a slight little cold, little snuffiness, so I probably need to get some vapor rub or some NyQuil or something like that. But sorry. Also, too, I wanted to make a video yesterday, but I was very busy. I was getting some things done, so I wasn't able to get around, to it. But like I said, there's really no set schedule. I just plan to make about 2 to 3 videos a week, and my schedule that I had in mind was doing it Monday, Wednesday, Friday, so that you guys' education or lessons can be spread out throughout the week. But regardless of that, I'm still committing myself to making them. Today, what we're gonna do, and I still actually have this up here from the last lesson that we took, which is on the we took this on the I believe it was either on the Heikinashii or Stochastic or something like that. So what we're going to be doing now is we're going to be doing lessons on the on moving averages. To be honest with you guys, I should have did this as our very first lesson, mainly because almost every indicator, or probably about 80% of the indicators that you see, are based on moving averages. And what a moving average is, it's just taking the price from a certain asset, a particular asset, and is averaging it out over a span of whatever period you may choose. So of course, they'll, when you hear, professional traders say the word like a moving average or something like that, majority of the time they'll say 10-day moving average, 50-day moving average. But in reality, it's not actually a day. They're only saying that mainly because when people first begin trading, they only use really daily charts. They didn't use like 5-minute, 60-second charts and stuff like that. It was probably available, but they mostly use daily charts to be able to see how the price reacted and changed over a day. And also too, Forex trading back then, things were much slower. People held positions for like months and years and things like that, to where now people do a lot of swing trading, day trading, things like that of that nature. So that's just something to keep in mind. Now, mind you, this one could be very lengthy, but I want to try to keep it as short as possible. I'm pretty much going to be talking about not the full uses of the moving average, but ways I feel personally that people should use a moving average, and in what proper manner they should use it. Now, mind you, when you see moving average right here, this is a moving average 50 that you see. And the way you open it up on free stock charts, all you gotta do is, like I said on all the other videos, just click on add an indicator. When you press moving average, it'll say add a price history. You want to add it to your price history so it goes on the chart. Very simple. And like I said, moving average, in this case, the moving average would be the average price over the last 50 candles. Now it is, sometimes it says day or period day, the same thing, but period in this instance, when you're looking at these charts, simply only stands for how many candles. So for example, we're using hourly candles, therefore it's going to be the average of the last 50 candles. So it means that for the last 50 candles, on average, the price is 1.17899. So what you tend to use, what most people use moving averages as, they use them as support and resistance areas. I think that this is the second most important way that people use moving averages, and that is as support and resistance areas. Now, in my honest opinion, on a moderately long trend, you want to use a 50 moving average. For a very long trend, you want to use, the longer that your trades is going to be in, or the longer that your trades is going to be active, that's the kind of moving average that you want to use. So for example, if we're on the hourly charts, and let's say that you are taking expiries for about let me say 24 hours to something like that, around that time, to where you're taking something that's significantly longer than a candlestick bar itself, you want to use about a 50 moving average. But if you're taking trades for a week or for a long term span, first of all, you wouldn't be using a candlestick chart that's this low in the time frame. But if, let's say, you were taking something for about 2-3 days, what you would tend to do is you want to bump your moving average up to probably about a 180. This is my next suggestion. And you see how it just switched. When you had it on the 50 showing you over the last 50 bars, but 180 is showing you over the last 180 bars. And you guys see the difference in the trend. You always want to trade in the direction of the moving average. So if you see the moving average starting down here and then going up this way, you want to be looking for call options. Unless the price drops below it, what you want to look for, if the price does drop below a moving average, you want it to first test the moving average. Like around this area right here, you want it to test that area and then bounce back down. Test the area and then bounce back down. These right here are not true tests because they could cross up or below. This right here is a true test. As you guys see, it was fighting around this resistance area, and bam, right there, it just dropped back down. Now, if it were to go back up to the moving average, you can use it for a down call or a put call. And when it touches the moving average, you can just take it going in a down option. This is all of this right here that you've seen is consolidation. And this crossover is just a sign that this is no longer a support, but it's now a resistance. So that's one thing to keep in mind. But like I said, if you're taking longer trades, you want to base your longer trades on a bigger moving average because you have a better gauge of what the market is doing in a long-term sense. Now, if you're taking trades that'll be like 24 hours, 8 hours, things like that of that nature, on an hourly chart, of course, you want to use something around a 50 moving average. And whenever the price bounces off here, you want to be able to get in on these opportunities. And you guys usually see, like if you were to look back, let me take you back here a couple hours. As you guys see, price is literally just skating along this thing. Now, this is one of the moving averages I suggest more than any one of them, and that's the 50 SMA. And I really only suggest it so much is mainly because I trade, because of the time frames that I trade. This is one that I use very, very often. This is a big part of my trading system. So like if you guys look, you see that the price bounces off here, consolidates, breaks below it a little bit, then it comes back above it, and then next thing you know, goes in the uptrend. If you had got in right here and you had expired 12 to 24 hours later, your trade will be ITM. And that's why I'm saying, like, this is very good for using them for a daily time frame. For example, take you another example. You see how the trade comes down here, gets very close to this moving average area. Of course, you really wanted to touch it, but even if it doesn't touch it, because your trade is going for a long span of time, and because you're taking your trade farther away, you guys will see that even if it gets around this area, it's still a good area to get in on, even though you wanted to test the area. But you guys see it comes right here, reverse, and goes up. You would have got an ITM, and it's the same thing. If you guys look from down here on up, you see it crosses over, tests the area a little bit, crosses over, and then it crosses back up. And for the next couple of days, from the 27th all the way up until the, oh, this is crazy, from 27th all the way up until the 4th, you could have used this one moving average to make almost all of your trading decisions, mainly because this has literally been skating up here the whole time. As you guys can see, it skates, and move it back over. She will talk about, and it's still skating, still bouncing off of it, and finally it breaks below. And this is pretty much, this is today. This happened on, not today, but this breakdown happened on the, I guess it's the 5th that it happened on. Well, it's the 4th that this breakout actually happens on, but you see that it's been skating on them or bouncing or reacting to this moving average since the 26th. So that's pretty much, if you were to add that up, that'd be about 1, 2, 3, 4. That's about 8 whole days you could have just used this one indicator in order to make decisions on. Now, in my honest opinion, I suggest using, using it as an aid to your own strategies so that you can get better confirmation with it, because you don't want to be basing your whole trading system off of moving averages, mainly because the nature of moving averages is that they lag. They respond a little bit later to things. Now, another moving average that I would suggest people using one that I've used very often and still use now is a 20 moving average. And I mean, you can make it, you know what, I would say go ahead and make it an exponential moving average. An exponential just simply means that it moves, it moves more quicker with the price. I think simple waits on the bar to close. I think exponential is based off of like where the price is at throughout the whole candle. So I could be wrong on that, but that's just my own mindset or deduction on it. So yeah, as you guys can see, 20 moving average, and you don't leave that alone because you don't want to do that. You want to also add in, and this could be a whole strategy within itself. I suggest adding in a 5 moving average with a 20 moving average. And like I said, you want to use this as an aid to your system. And this right here, this 5, this is your signal point, and the 20 is your crossover point. So for example, if you see the 5 cross below the 20, you have a good chance that it's going to go in a downtrend for a short amount of time. I don't suggest using these for daily expiries. I suggest using these for about between 2 to maybe between 2 to 5 or 2 to 6 bars away from where you entered in at. So as you guys can see, I'm gonna give you guys a couple of examples. As you guys can see right here, it of course is going to lag because it's a moving average, but as you guys see right here, it crosses below it, and that's a downtrend. See another one right here, crosses below it, and these are strong cross, so it'd be hard to get in on these. But one of these right here, you could have got in right here on the top of this candle, but it crosses below it, and that's another downtrend. Of course, if you took this one, you wouldn't have won that because that's an actual retracement. So if you had got in on that one, you would have just been stuck. Right here, you don't count these, or you don't mess with those because there's just too much consolidation. Now, you would have probably got in on a downtrend if you saw it cross below. So I can understand that. But if you see this consolidation and you see it cross above, I think you want to wait for more confirmation. You want to wait for something to finish above the actual moving average line. Another thing you can see is actually treating this too like a slight support. This 20 moving average, you can see that the price is kind of bouncing off it like a slight support in as well. So yeah, these crosses are relatively small and all that kind of stuff like that. They're better seen closer charts when you have different time frames and all that kind of stuff. But my honest suggestion is that you don't trade these alone. Moving averages are not meant to be traded with alone. I know that some people do it, and they do it because they have the eye to be able to see charts and stuff a lot better. But what I suggest is that you use it as an aid to whatever system that you have. So if you have a system and you feel like this is about to start a downtrend and you don't fully know, you can look at the 5 versus the 20 moving average. And if you see that the 5 has crossed below the 20 moving average, then you could take that as an opportunity. I'm sorry. You could take that as an opportunity to be looking for a put option or sell option on your trades. So yeah, that's one thing that I would say that moving averages are used for the most. They are used for support and resistance, and they are also used for crossovers. Crossovers is one of the biggest things that moving averages are used for. Now I know some people, I've heard of this before. I know some people use an 8 a lot. I've used the 8 before. Is actually, if you guys notice, the 8 is on my parabolic SAR strategy, and the reason why I use the 8, let me see if I can show you guys much clearer. The 8, the closer you get, for example, the lower you move the moving average down, the closer it's going to be to your price. But the 8 moving average is very, very good for a skating moving average, which means that something that the price will consistently bounce off of over and over again until it crosses over. And this is one thing that you can kind of depend on an 8 on. Like for example, if I was to zoom in and I was to give you guys a little snapshot of this right here, as you guys see, it crosses above, and let's say you want to get some strikes in right here. You see it hits this moving average, bounces off. This is almost like a very tight moving support, and some people even use it as stop losses, but I would use it as a means of kind of riding the price up. So like, yeah, as you see, it bounces off, goes up, comes out here, but then right here as well, bounces off, goes up, and it is showing a little gap right there. It comes down and it does break down below it, but it ends up coming back above it. And as you guys see right here, if you look closely, the price never finishes or goes below this 8 moving average. It's almost treating it like a support, and it does this for 4 whole hours. On the 5th hour, it actually breaks below it, and as you guys see, it doesn't go above it for about the next like 1, 2, 3, 4, 5 for the next 5 hours. In the 5th hour, it actually breaks above it, and when it breaks above it, as you guys can see, it's still skating above that 8 moving average. So for those who like to trade very quick time frames and who like to get a lot of trades in on a daily time frame, or get a lot of trades in a short amount of time, I would say the 8 moving average on the hourly chart would be kind of useful for you. You'll be able to get some very good strikes, and these will more so provide you with the strikes that if the markets do retrace to a certain point, it could be more than likely that it's going to bounce off of this 8 moving average within that candle or within that time frame, and then get you back up for an uptrend. The same thing over here, as you guys can see, this has a long wick on the bottom, which goes to show that prices was rejected from this point. And of course, somebody's probably using an 8 moving average, or people's using an 8 moving average, because it's responding to it very well. As you guys can see, price, even though it finishes a bearish candle, it doesn't finish below this 8. Same thing right here, bounces off. Same thing down here, price comes down, it's rejected by the 8 moving average, bounces off, and as you guys see, it almost skates along this line all the way up until it finally breaks down below it. So yeah, I think that this could be a very, very good 8-4 system for those who are trading in very tight time frames. Like if you are trading hourly candles and you are using hourly charts, I would say you can use an 8 moving average with that to be able to make those make cleaner or better decisions, or to get you the best possible strikes that you are looking to get. And if it don't enter, you just move on to the next hour. So those are my suggestions. I suggest, like I said, the 50 moving average if you are doing expiry from like 8 bars to, to about 24 bars. Like that's the best thing to use for support and resistance, and also crossovers to indicate where trend is going. If you're doing very long-term stuff, I would suggest 180 period moving average. And if you are doing looking for something that will cross over to give you an indication of a downtrend or an uptrend, I would suggest a 5 moving average coupled together with the 20 moving average. Now you could put it EMA. I think you should put an EMA, but also SMA works very well. And also, to be honest with you, SMA may give you a much cleaner look than what an exponential moving average would give you with the 5 and the 20 crossover. So just keep that in mind. You can test all of these things on your charts. And also, last but not least, I was talking about the 8 moving average. The price likes to skate along there. It likes to bounce off of it, move off of it. It uses it as a support and resistance. It's almost like it's surfing on the wave. And for those who like to trade those very quick intermediate time frames, you can get a good amount of you can probably get a good win percentage having this as an 8 for your system, and basing your strike rates off of it. So all right guys, thank you guys for tuning in. This is the lesson number I believe this is lesson number 4, if I'm not mistaken. We should have did this first because moving averages are very important. I may actually have moving averages pop back up in my videos in the future, but because I know it's so much stuff that's involved with them. But this is the bare basal minimum that I have experienced to have worked for me now and in the past when it comes to using moving averages. So also too, you can look up people online and you can see like what kind of periods they have, setups they have, and some people actually expose those to you to let you know whether or not they use an 8 crossing over a 34, whether or not they use a 5 crossing over a 20, or whether or not they use a 1 or the price crossing over a 50. And most people actually, I actually forgot to mention this, majority of people that uses a moving average, they do use it for a price crossover, which means that they'll get in on the signal the moment that the price crosses over the moving average. which means the moment that 8 candle finishes above a moving average, they would take that as a sign of an uptrend, and they'll get in on it for a short amount of time. So as you see right here, you see it finishes above this, and if you had got in on the uptrend for a couple hours, you probably could have scalped some profits or got in for an ITM. And it's the same thing for this one too. As you see, it finishes below, and bam, you would have got in right there. So this is the way that a lot of people use it too. I forgot to mention that, so that's something to keep in mind. Of course, they will probably have a much they'll probably have a much bigger moving average than an 8. They'll probably have like a 50 or something, a 50 or a 34. As you can see, this is way cleaner. As you see right here, the moment that this cross below, you get on this candle right here or somewhere around this area, and the price still hadn't finished above this. Not yet. I mean, it hasn't finished above this yet. And I'm sorry, I had to prolong this message. So if you go back down here, it's the same thing. You see that it breaks down below, it finishes down below. Of course, you would have had an OTM on this, but if you had got back in when it finished up above, then, you know, if you're trading Forex, you could have just let this ride out until it switches back over. But if you are trading binary, you still could have got an ITM off of that too as well. So that's just something to keep in mind. There's so many periods and so many moving averages settings that you can use that it's just thousands of different setups, or hundreds of different setups. So I can really only tell you so many. So that's why I made the choice to tell you guys ones that I've used, ones that I've seen success with, and ones that I've seen that works the most. But all right, guys, thank you guys for tuning in to Simple Forex Options. That was lesson number 4. I hope you guys found it educational. If you guys have any suggestions of any indicators that you would like me to review, check out, and I've seen a lot of you guys comments and response back to me, so I'm gonna try to get on them ASAP. But if you have anything you'd like me to review or check out, just let me know, and I'll try to get back to you guys as soon as I can. Deuces.